Hello everyone, welcome to Commerce Logic. Today we are going to see the determination of gross annual value. So the process of determination of annual value will be as following. So step 1 is ascertain gross annual value. Now step 2, reduce from it the municipal taxes paid by the owner in the previous year. So step 3 will be arriving at the net annual value. So if you deduct municipal taxes from gross annual value, then you will be obtaining the value called NAV, that is net annual value. So now we are going to see what is annual value. So the measure of charging income tax under the head is annual value of a property. That means annually you are going to pay the tax on your property. That is called annual value. So it might be the inherent capacity of a building to yield income. So on the income only you are going to pay the tax. So the expression annual value has been defined in the section 29 subsection 1 of the income tax, which is as follows. So the first condition is the annual value of any property shall be deemed to be. That means if the following conditions are satisfied, then it is deemed to be annual value. Then first condition under this is the sum for which the property might reasonably to be expected to be let from year to year. Then second one is where the property or any of the property is let and actual rent received or receivable by the owner. And third one is first 2 points is under letting out your own property. And third one is you are not letting it your own property for the rental purpose, and if it is being remaining vacant, then your income will be receiving low rather than if you give it is on rental purpose. Then we'll see what is in second condition. The second condition is where the property consists of the owner of a house or a part of a house. So, which is in the occupation by the owner for the purpose of his own residence. So, if the resident, that means owner, is using his building for his own residence, and second condition will be he is not using for his own purpose. He may use his building or his bungalow, whatever it might be, he is using for his employment purpose, business or profession purpose, and he has to stay in a other building where it is not owned by him. Then we'll see what is unrealized rent, where the amount of rent is not going to be received by the tenant, that is called unrealized rent. And the first one is the defaulting tenant has vacated. If the tenant has vacated, then we are not going to receive rent, then it is called unrealized rent. The defaulting tenant is not in occupation for any other property of the SSE. So for any other property of the SSE, if the tenant is not in any occupation, then it is also called as unrealized rent. Then if the tenant has not paid any rent, the SSE has full legal rights to recover rent from his tenant. So now we'll see gross annual value. You have to take two things, that is expected rent and actual rent received. So these are the two things. If you have these two things, then the gross annual will be called as higher of these two things. So this is all about gross annual value. If you like it, please subscribe my channel. Thank you for watching it.